Hi, everybody. Welcome back to the channel. I'm with Jack, also known as Alpha Charts 365 on Twitter. And we are going to discuss his background, and we're going to talk about the current market conditions and how we are handling this environment. And then Jack will also talk about what it's like to work a day job and trade. So without further ado, Jack, would you like to talk about yourself?
Oh, thanks, Oliver. I appreciate that. Thanks for having me on.
Of course.
Yeah, so I'm a regular guy. I mean, I have no formal training in markets. I didn't work for a hedge fund or for a big bank or anything like that. Like you said, I work full time. I do this, um, after hours and weekends and things of that nature. I've been trading for since about, I think, 2014,
Okay.
2015, right around there. So I don't have decades of experience or anything like that. But, I've gone through a few different types of markets. Even that 2015, 2016 market was not a fun way to start, to be honest with you.
Okay.
Made a ton of mistakes along the way. It's the markets are brutal. You really learn a lot about yourself and your emotions, and when real money's on the line,
Right.
it changes everything. But yeah, I'm a normal guy. I mean, when it comes out, I consider myself the guy next door. I could,
Yeah.
I'm like everybody else out there.
And yeah, I think a lot of people can relate. I think there's probably more people that work full time that trading is something that they want to get involved in, but obviously can't sit in front of the screen all day. So, what I would like to get out of this and what I'm trying to get out of this YouTube channel is to help people with full-time jobs be prepared for like the environment we're in right now, where maybe it's better that you just don't trade.
Yeah.
Or something that I'm learning is I do like to participate in the market,
Hmm.
but right now it's too risky for me, so I'm still participating, but much much lower, where um if I lose $400, I'm
Hmm.
like, whatever, it's a good day. So um for me, at least in my account
Right.
size. So yeah, I think we can help people understand the different market cycles and how to manage.
Sure. So I think something I've learned along the way is first thing is time frame matters, right?
Yep.
So if you're working full time, obviously you're not day trading. You have to think about your time frame needs to be days to weeks in general. If
Right.
you try to do anything shorter than that, it gets harder. It gets much harder. It gets more emotions involved. You may play it too tight. Trying to sneak glances at your phone or something like that. So
Yeah.
right,
I
we've
think
all
we're
been
all
there.
guilty. Yeah, we're guilty of that.
Yeah. So you have to, time frame matters. So I think that, once you realize, okay, I'm a, days to weeks type of trader. Okay, then now we can say, okay, well, how do we I have my dog sitting on my lap, just so you know. If Stella makes a visit, she's right over here,
Okay.
but she's quiet. But you know, so then you have to say, okay, well, most of my work needs to get done when the market's closed. Because when the market's open and price is moving and ticking and everything else, it again, that's too emotional of a time. And especially if you're at work or trying to look at charts or whatever, I think the best work is done when it's closed, no matter who you are personally. I run my scans after the market is closed. I do my heavy work on the weekends when the market isn't open. And that's where I formulate my ideas, my kind of my weekly game plan, the stocks that I'm watching for that particular week. All that work is done on the weekends. And I think that once you realize that you can't trade at work and you have to
Yeah.
set the plan in motion and then go with it, and you can't. So let's get into social media for a second here. All right, because that's what sabotages and sabotaged me for a long time. Is
I
that
went through a period too.
yeah, you see people that are professional traders and go through and they're posting things intraday, and no one loses on social media, right? No one loses on Twitter. So they're posting stuff and they're winning all the time or most of the time. And so then that FOMO, you feel like you're behind, you're not doing well, when you may be doing just fine.
Right.
But you're just doing you. You know what I'm saying? Let them do them, and they may have something to offer. You may learn something from them, but that want to be like them, to be able to be, whether it's a full-time trader or you have to understand where you're at. And I'll be
Yeah.
honest, we have an advantage because I don't need to trade to pay my bills.
Yep.
And that's a huge advantage. I mean, the stress that traders that have to trade to pay their bills, that's enormous. Your system better be pretty darn good for that, or you have a lot of reserves.
Yeah. And so, something that I am fascinated by is how the amount of capital that you need in the account in order to generate the profits to live off of.
Mm-hmm.
So you're trading with enormous amounts of money.
Yes. Or leverage.
Yeah. But $500,000 accounts, $1 million accounts. That's a lot of, that's hard. That's hard. That's gotta be hard to do.
Yeah, you're dealing with size, and then and things of that nature. And again, if it cuts against you and you're not on your A game, or maybe you just had a fight with your wife or significant other, or something happened and you blow it one day, that's hard. So anyway, I think us working and trading is a huge advantage, not a disadvantage.
Yeah.
And I think we need to play to our strengths, and that's what I try to do. I'm not perfect, and I post my wins and my losses on Twitter. I'm pretty honest, pretty open with that kind of stuff. But yeah, so I think time frame matters. I think making your plan on the weekend or while the market's closed, at least, matters. If I'm going to set up a trade, or I'm going to look at 2 or 3 stocks for the next day for a potential trade, I might plan on the weekend. Okay, if it does this, then I'm going to get in. If it doesn't do XYZ, then we just move on, right? Because we don't have to trade. I mean, it's a privilege, not a requirement.
So are most of your entries buy stops, or are you getting an alert and then manually entering?
Usually buy stops. Usually just because if I'm at work, I don't have time. I was doing alerts for a long time. And I've done that. And I still do that sometimes, but usually it's gonna be a buy stop, or I go to jiu-jitsu. And like this morning, I literally just started looking at the markets about 15 minutes ago. Okay. Literally, I got home, I showered, I ate, I came on here, and I started popping through charts and seeing what's going on. Right. So I use a buy stop if I want to, enter a particular name at a particular level. And I wanted to trigger while I can't be at the markets, and it works out reasonably well.
And so do you, even, I mean, obviously not right now, I hope, but even during a nice, strong market, are you ever on margin? Are you ever too exposed, or do you, for your own peace of mind, do you keep it low key, and as far as your risk exposure?
Yep. So I don't ever go on margin. I don't. That's more risk, and that will keep me up at night, right? Especially in a choppy market, right? Now, if we have, I don't go on margin at all, but if we had a strong trending market that's up and to the right, I understand why people go on margin in those types of markets. But I don't. Again, I want to be able to sleep. That's why I don't trade crypto. I buy and hold crypto, but I won't trade crypto because I don't know what happens while I'm sleeping. Look at,
Yeah, thank God. Thank God the stock market is not 24/7.
Yes.
Yeah. And that's exactly why I don't even look. Like, I see this stuff. Obviously, everyone's posting about Bitcoin and Doge and all this, and it's breaking out, or 53,500 is the next level. And it's like, I don't even know what price it is because I don't check.
Gotcha. Yeah. I keep tabs on it. And so here's how I look at crypto. We'll just jump on that real fast. Is I look at crypto as the riskiest of all risk assets.
Yes.
And so I look at Bitcoin, again, like I said, I own some crypto as a long-term 5-year horizon, dollar cost average type scenario. But I look at Bitcoin as an indicator, as the riskiest of the risk assets. If it's starting to roll over, chances are that will bleed into the market. Yeah. And if it starts to recover, chances are the market's going to recover with it or soon afterwards. And we saw that very clearly within this recent downtrend. Bitcoin rolled over first and the market quickly followed. Bitcoin recovered and we saw the market starting to come back with Bitcoin.
It's interesting.
Yeah. So yeah, riskiest of the risk. And so again, as an indicator, kind of neat.
Yeah, I started my trading with crypto in 2017 is how I got introduced into trading. And I remember I traded Bitcoin from like 7,000. It was when it went to 20,000. I traded like, I think I got in at 7 and sold at like 19, almost the top. It was like a couple $100 off the top. And man, that feeling was unreal because it was like my first time ever like having money make money.
Yeah.
And I was like, whoa.
Yeah. And now you get to keep it.
I've probably blown it since, but
but yeah, no, that's amazing. That's awesome. Great run.
Yeah, that was
a good trade.
Yeah, that was unbelievable. That was on Robinhood. That was like, that was my first kind of introduction. And then what you said, how you started, you said that you've been through a couple cycles. You know, I've experienced 2020, which was great. 2021 was even for me. I broke even. And then now I'm experiencing this market. And I'm flat as well because I learned from 2021, like not every year is 2020.
Right.
2019, I made a little bit of money, 20%, something like that. And so just to close the loop on the crypto thing, having a market closing, not 24-hour market, really helps you from not obsessing too much, because it can really, going from year to year, if you're just getting so wrapped up in chasing and, thinking every year is 2020 and the market was 24 hours, you would.
Yeah. I mean, you have to sleep at night.
You wouldn't
over
sleep.
Time, that stress level of worrying about the markets takes its toll.
Yeah.
I mean, your sleep is interrupted. You don't feel good. The next day you're getting up, you're trying to trade, whether it's that market or other markets. Then maybe your trading gets hurt. Then you get irritable and you start fighting with your, I mean, it just rolls over to all parts of your life. For me, it's just not worth it. Now, if somebody wants to day trade crypto or do something like that, good, God bless you,
Yeah.
I
did for a very small period of time. I did get caught up. I will blame social media. I did get caught up in this Webull 4 a.m. thing. You can trade Webull.
Mm-hmm.
Yeah, Webull you can trade at 4 a.m.
Okay.
And so I opened up an account. I don't know what I was thinking. I opened up an account just so I could trade in the middle of the night. And I would wake up. I would set an alarm. I'm on the West Coast for 1 a.m. And I would enter a position and then go back to sleep just so I could get a pre-market run. And I only did that a few times. And I was like, my wife was like, how much money are you making? And I'm like, just not really that much. She was like, then stop. Like, if you were like really making money,
you're killing it. That's one thing.
She's like, but if you're like just breaking even or just coming out, like, please just sleep.
Yeah.
So that kind of is what started me on like the mental side of the trading. And so I've been getting into the books and different podcasts. I know, Richard does a lot with mental coaches and stuff like that. So I think that's super important, especially for new traders, is to really nail, I think, two things. Just focus on price and volume, and your mental. And then everything else, all the buy stop versus buy limits, hard stops versus that stuff, you figure it out on your own.
Yeah, no, I agree with that. Tom Canfield, he's amazing for that. Keeps it real all the time as far as the mental part. Jared Tendler, I think Trader Lion's going to be doing a series with that on the mental part. But I agree with you. I mean, it's price and volume, and then everything else. I use a couple moving averages, just for trend definition.
Right.
But that's it. Yeah, you figure everything out. And again, listen, you pay your tuition in the market,
Yep.
right? None of us
Yep.
get to be in the market for free. We don't start out as good traders. That's not realistic, right?
Right.
So we have our bumps and our bruises, and we have our stupid things that we do. And mine was JC Penney back in the day. I was stupid with JC Penney, and I lost like 50% of my accounts or something on that one trade.
Wow. So I'm not
Yeah.
familiar with that. What happened? I'm not
Oh,
familiar with.
so yeah, I think it was 2015. And JC Penney is a department store in the mall, whatever, been around for like 100 years. It was in a downtrend. And so I was like, hey, it's in a downtrend, but it's cheap, right?
Right.
It was like $7 or something like that, $6. So I bought some. And then it went down. I'm like, oh, now I'm under the water. So, but it's pretty cheap. So I'll just double my position size. You know what I'm saying?
Oh,
And I did that a few times, and it just kept going down. And then, the rubber meets the road one day. And
yeah.
let me tell you, ripping that Band-Aid off, it sucks. It
Yeah.
absolutely sucks. But
Y-
I ripped up Band-Aid off and, took my haircut, and then I moved on. That was it. Yeah, I took a couple of days off, but but
Yeah.
but then I moved on, and luckily I was trading small, even though it was a 50% drawdown. It wasn't a big account at that time. It was a small account. My wife and I, we make our financial decisions together, and my trading account is a separate entity from
Yep.
retirement accounts or
Yep.
anything like that. So and we started small. She let me have a certain amount of money.
Yeah. Yeah. Yeah.
And then that's where it started. But that JC Payne trade, I mean, taught me a lot. Don't buy things going down. Like a huge lesson.
Yeah. I that hasn't happened to me, but I did get with ARC at the end of 2020. I bought it like 150. And it was the beginning of 21 when growth had a 25% correction or whatever. And ARC went down. And at the time, and I still talk to him. He actually will watch this. I said, what do I do? He's been trading a lot longer than me.
Okay.
He said, ARC it'll come back. And obviously, where it is now, it's nowhere near 150. But I held on way longer than I should have.
Right.
And I think it probably was 20% of my account.
Okay.
Maybe 15%. So it was a big
Yeah.
hit.
Yeah. That hurts.
And so, I think this was before I read, Bill O'Neill and some of the other books where, Mark Minervini, never average down.
Right.
Just if it doesn't go your way, just sell.
Yeah.
And, it's hard for beginners, at least it was hard for me to go like, you just accept a loss. And it's like, once you realize a 0.5% loss is 1,000 times better than a 2, 3, 4, 5, 6, 10% loss. Yeah, you'll cut your loser immediately.
Yeah, you can't lose it. But I'll be honest with you, and I share this freely. I hate losing money. And I mean, I take my losses. Don't get me wrong, but I hate losing money. You know what I'm saying? Like every time I enter a trade, I think it's going to the moon, or else I shouldn't be entering that trade, right? So when it goes against me, yeah, I honor my stops, but man, it sucks. I hate it. Absolutely hate losing money.
Yeah, I'm learning to accept it.
Yeah,
But
yeah.
in 2020, and actually, yeah, 2019, 2020, I didn't take that many trades. I only was taking maybe one trade a week, maybe two trades a week, way lot less than what I do now. And I didn't have that many turn on me just because of the market condition, and I had a longer time frame. So I said, you know what? For example, DraftKings. I bought DraftKings thinking this is going to be a 5-10 year hold for me.
All right.
And so even if it did turn on me, it was no problem for me. It didn't turn on me and ran. And then this, when it started rolling over, I sold, but I was more than willing to accept or hold on while it turned back then because of my conviction, because I was
Mhm.
expecting to hold it forever.
Right.
Um,
Right. Yeah. I mean, and that's hard. Everyone talks about, buying the next true market leader, right?
right.
Everyone wants the next Amazon. And we all do. Well, two things. One, even those true market leaders have huge drawdowns as they go up, right? Amazon,
Yep.
there's, 50+% drawdowns multiple times, especially earlier on. And two is it's really hard to find those true market leaders, right? I mean, like they're not, after the fact, it's so easy. Oh yeah, it's Netflix, it's Amazon, of course it is, right?
Right.
Um, but in the present, not quite as easy. Like I have a few that I think Coinbase could be, right? Maybe it's right. It's right now it's not right, but I think it has a potential for it, right?
Yep.
You know, um, yeah, a few others, right? But we don't know that it could go to zero too. I mean, so that's why risk management and time frame, like you said, matters so much.
Yeah. Yeah. So, my time frame is much less now. Obviously, I'm not even, there's not, outside of Apple and Tesla,
Mhm.
there's nothing that I would hold for like ever. I
Right.
think, even Amazon, I'm like,
Yeah.
so I'm not right now, I'm not gonna let anything, if it turns on me, with 1 or 2 days of holding it, I'm out.
Right. And again, right, like what I hold in a retirement account
Right.
is going to be a completely different time frame
Yep.
than, like I own some Palantir in a retirement account. It's doing crappy, man. it's,
Yeah.
it's it's down quite a bit, right? But it's a 5-year retirement. It's
Yeah.
looking out 5 years.
Right.
Again, I'm not going to retire in 5 years, but it's looking out 5 years,
Yeah.
and then I get to make a decision on what we want to do with it.
Yeah.
So, so it hurts to hold on to it, but if that's going to be the time frame I chose for that account,
Right. That
then
makes
I
sense.
have to
Yeah.
roll with it, good, bad, or ugly.
And so we talked before we started recording a little bit about Bros.
Mhm.
Is Bros one of your possible true market leaders?
I think so. I think Bros is a potential true market leader. It's a growth company. I mean, I think we have Starbucks and Dunkin' Donuts, and I think their brand, Starbucks for sure. I think it's getting stale a little bit, and I think that particular industry is ready for a disruptor.
Hmm.
Maybe it's Brothers Coffee, or maybe it's not. I don't know, but I think it's got a lot of potential, a huge growth runway.
Yeah.
It's only in the West. It's not even in my area. I think Texas is as far east as it's come. Um, it's got again, I went on their website and did a little due diligence. Their board of directors, it's not run by the founder anymore, even though I think he's still on the board, but it's run by a top-notch board of director, with lineage and other companies. And they have growth plans, and that's
Yeah.
what the market wants. It wants growth. When everything's said and done, right,
Right.
we buy growth. And so I think Brothers Coffee has the chance for that. Like I said, I think Coinbase has a huge chance for that with as crypto gets more and more adoption.
S-
And a
So
few
you,
others.
so you mentioned that you've been stopped out on Bros.
Yeah.
So and I'm having a hard time getting my position on it as well. So even with your conviction, you're still managing risk, and not letting it turn on you.
Yeah. Well, and again, it's the account that matters too. So this is my swing trading account. So this is a swing trade position. Now, I haven't bought any retirement accounts. I plan on it fairly
Okay.
soon. Tax season's upon us. So um I plan on putting some for a long-term
Okay.
position in my retirement account. That's going to happen. It just hasn't happened quite yet. But as my swing trading account, I'm managing risk, and I'll be honest. I love the name, and I liked it too much, so I got a little bit too
Mm,
big into it, and so then I had my stop a little too tight because I was a
yeah.
little bit too big, and that's where the cascade of things
Right.
went downhill for that one, and it stopped me out on a shakeout, and it reversed and went higher. It's just what
Yeah.
happened. Sucks, man. I was pissed, but
Yeah.
but uh, but that's life. I mean, it's my fault.
So are you in it right now?
So here's what happened. So here, you want to pull up some chart? You want to pull
Yeah.
up a chart? Yeah.
Uh,
Do a screen share maybe, or
yeah.
let me see how we do this. I think you have to give me access, right?
I don't think so.
Host disabled participant screen sharing. So
Oh.
just give me some access and we will do it.
Okay, how do I give you access? Advanced sharing. Oh, multiple. No, advanced. All participants. All participants.
There we go. I think we're good. Can you see me?
I can see you.
See
Oh,
my screen?
perfect. Yep.
Perfect. That's the cues. Let's just put bros. Okay. So here's the chart of bros. And so again, I love this setup. It was a beautiful, perfect double bottom textbook, really,
Yep.
in my opinion. I had the VWAP. I do put VWAPs on new IPOs from the beginning. That's the purple line.
Okay.
And I did it from the peak, right? So those are my VWAPs that I anchored in there. I use VWAP sometimes. Again, I have a whole bunch of moving averages. We really don't need all them. And I use them. I use the 923 almost exclusively. The other ones,
Interesting.
I really don't.
I'm 821.
821. Okay, same idea. I mean, they're going to look
Yeah.
so similar, right? So yeah, and so moving averages again. I'll like in this market, I'll look at the 250 because they're relevant. But in uptrending market, I won't even look at those because they're not relevant for my time frame, really.
Yep.
All right. So, but in this particular trade, so we had a beautiful double bottom. You had this nice big volume breakout here. That was perfect, right? That's exactly what you want to see. You came back, you retested it on lower volume, right?
Mm-hmm.
Beautiful. And so I believe I bought it on this day right here. And I bought it 2 different times on this day right here. So I had a good cost basis. And if I was wrong, it was fine because I'd be breaking, these 2 VWAPs and I'd be underneath this, my green shaded area, which I consider the area of support. And I'd be out, you know what I'm saying? And, maybe 0.5%, 1%. I mean, that's a really, good risk reward in my, for me. And the next day he had a nice up day right here. Beautiful. And then it broke out. And then I kept moving my stop up.
Yep.
Okay. And it broke out. And then when it came back below here, I had my stop too tight.
Okay.
And it just shook me out.
And so you're out now.
So then
It's a tricky one, huh?
Yeah. So then it was yesterday. I'm sorry, I lied. I didn't get out on this bar right here. I should have. It went green and it went red, but I did not get out here. I lied on that one. I got out on this bar, which was the undercut of this right here, because my stop was on this low. So this was the one that shook me out, and basically at the bottom, right? Great. Yeah, but that's where my stop was. It just, tagged it, and then it reversed higher to close green. So there's that. So then this day happened right here. And somebody from Twitter, somebody I respect very highly, reached out to me when they saw my tweet, and we talked. We went back and forth about this trade a little bit, and then after a conversation, we talked about sizing, and that's when I realized I was just sized too big.
Yeah.
In here, right in here. So what I did was I bought a quarter position back. And it was down on the day. And I said, you know what? I think Bros is going to be a potential true market leader. I want to be involved in this particular name. So I just scaled it back to a quarter position.
Gotcha.
That was it. So I do have that position still today. It's still in this kind of consolidation. Yeah. I may add to it if we get a close above this white line. Right now, that seems to be where the battle is being fought.
Yeah.
So, and again, I plan on pyramiding into this particular name. It may be a little bit extended and it may need just a little bit more time to go sideways, and it may be just build this out, but it's getting actually reasonably, if it can tighten up and we're seeing that a little bit. Again, I love the name. I like the story. I think it makes sense. I think they got a lot of things going for it. And I put it too tight over here. Shook me out just by a smidge.
So I played it a little bit different. I bought it at 52 in the little lower consolidation.
Okay.
right,
down.
no, that one, yeah. So I
This one right
bought,
here.
yeah, at the end of at the
Hmm.
close,
Okay.
I bought, so I bought right at the very, very top. And
Gotcha.
then the very next day, I sold.
Nice.
But I sold. I sold
Okay.
because it dipped. And so I thought it
You
was
sold
gonna,
down here?
yes,
I
I was real too tight.
yeah.
So then I re-entered, um I don't know, somewhere in the middle there. I don't know, I can't remember. So now
Okay.
I'm back in,
Hmm.
and I'm green barely. So yeah, I don't know which bar. I bought one of those bars, but a
Yeah.
much smaller size. And I had my, so now I have my hard stop at 52. So I'm giving it
Okay.
room.
Hmm.
And I plan on, if it, busts out of, the 60 range, or bust into the 60 range, I'll add. Um,
Gotcha. Yeah, which makes sense. That's roughly where I plan on maybe doing an ad
yeah.
also. And because I went with a quarter position, I don't actually have a stop on this right now, a hard
Okay.
stop, because I positioned so small on this one.
Yeah.
Because I will give it really, I'll let it go to, it's got probably this area right here,
Yeah.
which is the VWAP from the IPO and the 23-day EMA right there. If it breaks 5250-ish,
Mhm.
then I would probably sell again on this particular name, because I think then it would be below my green area, below these moving averages, the VWAP, all the, from the top and from the IPO. So that's right now my absolute area. And again, if I add to it, the nice thing is I have my cost basis will be not, will be a little bit lower, which is good. And we'll see. Maybe it's making the right side of its first IPO base, and it
Yeah.
could run up to the 77-ish level, somewhere around here, and then we can see what happens with it, right? You never know.
Are there any other names that you are interested in at the moment, or any new positions?
Um, yeah, I could run through a few names that
Okay.
like from my watch list over the weekend. I own MDRX right now. So again, this
That
is,
looks good.
yeah, it's a cup and handle kind of pattern right here. Big breakout, kind of pulled back, right? Um, again, lower volume than obviously the breakout, but not tiny volume on the pullback. But again, so I bought it in here. I don't remember what day, and it's just marching higher. Maybe this is some kind of wedge, and it's gonna try to break down from. I don't know. I'm just gonna use the moving averages and just keep raising
Yeah.
stops on this one. And I'm in the money on it, obviously,
Good.
and I'm just gonna keep let it march higher. And like I said, it could go. It's a $21 stock. I don't know if it's gonna
Yeah.
go to 50 or go to 10, but you know, but I'll manage my risk against it, and I'll ratchet without being too tight my stop, and let it keep going. And then again, a big day like this, so I put a VWAP on there. I like to anchor it
Gotcha.
for any like big volume, big gap up day. It wasn't earnings. I have no idea what the news was this day or why it moved 16%, but it was an important event for the stock. And so now I can kind of use this VWAP. And you see, as it kind of chilled out a little bit, it started to respect this VWAP, right?
So,
Here.
on this trade, did you buy on the big gap up, or did you wait for it to settle, a few days after?
I waited for it to settle a few days after.
So
I
my
don't
question,
remember.
so
Hmm.
that's okay. Um,
Yeah.
was it on your watch list before the big gap up, or is it on your watch list because of the big gap up?
It's on my watch. This particular name is on my watch list because of the big gap up.
Okay, cool.
Yeah. And I run scans and things like that to help me identify this type of situation. Right. So it's yeah, I'm looking for this. When you go back, let's go to a weekly chart on this particular name. Um, you know, so it's kind of interesting spot right here actually, because you're now messing with these
Mm,
2011 highs. I actually didn't look at this far back on this, but yeah, I can, as it's coming into here. So I may actually start to scale out of it now, seeing back here. Again, I didn't go this far back on my initial charting, but you know, but again, it looks good. It's good
yep.
volume. I may scale out. I'll probably maybe scale out a third to a half into this potential area. Let it see what happens. Then I could then add back into it if it does break out. And then again, I have a pretty good cost basis because I have half a position already from a much lower level.
So since you aren't really able to watch intraday, are you when you're scaling out, are you trying to scale out at the open, sneak away, and or do you have to wait till lunch, or what does that
Well,
look
what
like?
I will do in something like this is I will probably put a sell order in and maybe out, 22.25,
I see.
something like that. And if it hits and I'm out. I don't care if it goes to 22.50. I don't care if it goes to 23. It was a profitable trade for that piece of it. And I took my money, and that's now it's somebody else's problem, type of thing. Um, I can always add it back in, which is kind of nice.
So it does seem like the mechanics of your trading is very automatic, and
The
then
more the merrier, the better.
yeah,
The more automatic I can make it, the better. The less emotion involved too, right? If
yeah.
I put my sell in, again, about 22.25 is probably where I would put it. Let's see where this was. Yeah, somewhere around between 22 and 22.25, right around there. I'll put it in there, and this way I'm not worried about it. If it hits, awesome, 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 awesome. But it takes the emotion out of it, and again, I get busy at work, and with my job, I can't be on my phone but a few times a day. Um, so I can't miss it. It has to be automatic.
Yeah, I fortunately or unfortunately, I don't know yet. I do work at a desk. So I can find myself watching it intraday a little bit more than I should for work, but also should for my mental health. So
Yeah,
I am trying to incorporate not having the screen up and just only setting alerts and reacting to the alerts.
sure,
Because
sure.
yeah, there's a lot of emotion. It's really hard to not look at a 15-minute or not look at a 5-minute to see what's
Yeah,
going on. It's very difficult. So it's
for
better
sure,
just to leave the screen away from you.
sure. Especially if your size is a little bit too big.
Yeah. So maybe one more chart.
Yeah, sure. Let's see what we got here. Arch Coal, that's a good one.
This
So
one
I got this
I
one.
had a hard time with this.
Yeah, so it's again another cup and handle. It's not the only thing I trade, obviously, but I do look for them. And it's choppy, right? Look at all
Yeah.
these wicks everywhere. So that is hard. But this is where the kind of the moving averages help a little bit in defining trend. And this one I got off. Again, it's a smaller size position for me, because it's one that has a high short float. So the idea behind this is that eventually everyone's gonna have to cover that's short. And with that, you're gonna get hopefully a short covering rally, and you get a big pop, and things are good. So right now, this particular chart's at all-time highs. And that means that everybody that's short is underwater, right? There is nobody that's short that's in the money. And eventually those folks are gonna have to buy shares, and we should hopefully see maybe a multi-DA run, exhaustion type of run. And that's where I'd want to take my profits in this particular one. But it's a nice looking chart again. But again, it's kind of, it's a harder one to trade if you're too tight on this one. That one, that's Arch Resources. Let's see another good one that I've been watching. VRRM, Vera Mobility.
Yeah, I did see I've seen you posting about this.
Yeah, I
Um
mean,
it's a very interesting looking chart.
yeah, I mean, huge growth name. It's got this, I was worried, is this kind of like too tight, too long type of thing, but it's given a place to manage risk. I was in it in this. This is where I bought it, right
Okay.
in here. And then it shook me out on
Mhm.
this day, right? So it just, I had my stop underneath this bar right here, and it shook me out on this candle, went green, and it's gone off to the races since. Um, yeah, it's a good looking chart. I like the name. I don't know exactly what they do because that's not my thing. But they have good growth estimates, and a healthy chart, right? That's a nice little base that it's created.
Yeah, this is interesting. It kind of reminds me a little bit with Mattel. MAT. This is something that it's so funny because last night on Twitter, I posted and said, this is a name that has 11-month base. And I said, I wonder when it's going to get over the 22 level. And then today gaps up and runs.
Yep. Had earnings, I think. Today. Yeah.
And so,
Yeah.
so I bought a little bit today, just to see if it can go. I don't think it's going to go because, it's got, I don't know. I'm expecting it to not go.
Gotcha.
I'm always a little bit suspicious whenever something's been sideways for so long.
Too long. Yeah.
I would much rather a 12-week over 11-month base.
Yeah. Well, look at LNG, right? You look at LNG, and let's go out to the weekly, and this thing literally just broke out.
Wow.
Right? This is going back to 1979. Okay. So
wow.
The Cheniere Energy. I mean, so now it's just breaking out. It took how many years, right? 32, 33 years, whatever it is. 20. Wow. I'm sorry, 42 years.
Wow.
Yeah. So yeah, you never know what's going to happen with any particular name.
The same thing. Microsoft, I think, was 16 years. If you go to the monthly.
Yeah.
Or yeah.
Yeah, that's 99 right there.
99.
It broke out 2015. 16 really.
Yeah, that's a long base.
Yeah.
So maybe maybe Mattel will make me a millionaire. I don't know.
Yeah.
I doubt it. But it could.
You never know. You never know.
Well, I appreciate that. That was very cool to see some of the charts and names that you're interested in. Just to wrap it up, are there any books or podcasts or any resources? I see you pay for TradingView. Is this the paid version?
This is, yes.
So any sort of resources like that you think will help out with either new traders or traders that are struggling?
So I think, podcasts like this one that you're putting out. There's others, you mentioned Richard Moglen. He puts out some great stuff. The Trader Lion group does great stuff. Following some pro traders that are honest. And again, sometimes it's not so easy to find them, but you can find a lot of information from what they post and how they look at markets. My favorite thing to do is listen to a podcast or something with people just talking about what they're seeing.
Right.
To me, that's where I get the most benefit, because they're not feeding me a setup. They're telling me how they think. And if I want to improve my trading, well, I need to think how the pros think. And I think that's a huge deal. How to make money in stocks, William O'Neill. I mean, that's for sure. Mark Minervini's books are very good. I found a lot of good information in them. Really, really good. Again, a handful of pro traders. I tell you, in my opinion, I have a smaller list of traders. I mean, when I get to 100 people I follow on Twitter, I start to trim it, right? Because that's too many, and there's too much noise and too much FOMO and too much of everything going on right there. So I think keeping your social media to a manageable amount and the right people, I think that's really, really important. Trying to think other resources, people. I'll be honest, YouTube is great as long as you again follow the right people, right? You got to follow honest, forthcoming people. I know Mark Minervini's got some webinars from like 5, 6, 7 years ago, or maybe it's even longer, but they're great. What I'm saying? Like they're fantastic. And there's so much to learn from that. But yeah, that's those are the resources.
Perfect.
I would do.
Great. Well, thank you, Jack. I appreciate it. And good luck with your trading.
Thank you.
Hopefully
Appreciate being here, Oliver.
Yeah, thank you. Hopefully we are in the start of a new bull run and we can get out of this mess.
Yeah. We'll love to hear that.
Okay,
Absolutely.
Jack. Well, thank you again.
Take care, Oliver. Bye-bye.